Today I've traveled outside of the studios to actually come and get you insights from a very special initiative. It's by early stage investor Lightspeed. The initiative is called Extreme Entrepreneurs. In fact, recently we had covered one of the partners who was the brainchild behind this initiative. The initiative is quite simple. It doesn't cost any money. It invited applications. We understand nearly 900 applications were received by Lightspeed to be a part of this series, which runs into 6 weeks. Some of the best mentors from around the world have held masterclasses. I'm talking about the likes of the PayPal founder as well as Ritesh Agarwal of Oyo. Having said that, we came here. Over the next couple of weeks, we'll put the spotlight on all of the entrepreneurs that made the cut. There were almost 900 applications and only 10 were shortlisted. We're going to get you details of that. But first up, we're going to get you a very special interview. If you don't recognize him, it's only because he's media reticent, but he is one of the country's top venture capitalists. I'm talking about Dev Khare, managing partner at Lightspeed, part of the founding team. And you know, this is a team that has been credited for finding and spotting unicorns very early on, whether it's BYJU'S, whether it's Oyo's, and of course, recently he's been making waves with the likes of ShareChat as well as Uran. Here's my conversation with Dev Khare. Well, we are coming to you today from the finale of Lightspeed India's Extreme Entrepreneurship Initiative. Think of it as a crash course for 6 weeks for young founders. It went through a dueling process where you had 870 applications, 10 shortlisted, and joining us to talk about this, part of the founding team of Lightspeed India, managing partner Dev Khare, also known to have a Midas touch, did discover BYJU Ravindran. We'll talk about that in just a bit. Dev, welcome to Startup Central.
Thank you.
We usually think of you guys as ruthless with just one name in mind, which is to make money. But here's something, if I may say so, something you're doing to make the ecosystem more robust, to mentor young founders. How did this come about?
We've now been investing in India since 2007 or so the last 12, 13 years, and globally for the last 20 years or so. And the Indian ecosystem has matured a lot since all the VCs and startups got started here in 2006. And what we felt was that there's a need in the market for agenda-less conversations with entrepreneurs to help them access the right people out there who can help them and to give them advice which is not biased. And so that's what we're doing here at Extreme Entrepreneurs. It's been very energizing for me, where typically we're talking to portfolio companies and we've invested already and we have a certain view in mind as to how they could develop, and we work together with those companies, those founders to develop their companies. In this case, we're working with 10 companies. We don't have an agenda in mind. We're just their friends. We're bringing all our access and our experience to bear to help them for these 6 weeks and beyond. We'll keep in touch with all of them. And that means that the conversations tend to be a lot more honest. And everybody's vulnerable on each side. We're just saying what we really think, they're saying what they really think. Versus in a typical investor-investee relationship, the investee is sort of not saying everything all the time. They're trying to market a little bit and say that everything's going fine. The investors sometimes are trying to say, here's how you should do things because we think this way, so do it. Both of those, I think, are not the most productive things to do for companies. And in Extreme Entrepreneurs, we avoid that because we're not investors and they're not investees. So it's just friend to friend.
So then what does Lightspeed get out of it? You know, I get it. It's straight from the heart, is to make the ecosystem more robust. But you know, all of you are, time is money. And you're spending a lot of time here. You're also expecting people like, let's say, Ritesh Agarwal, who you may have a very good relationship, as well as, of course, have it bet on Ritesh Agarwal, who the founder of PayPal. But like we say, time is money. So what do you get out of it?
Yeah. So hopefully over time we build some more goodwill in the ecosystem that we've contributed back. We're building the ecosystem along with all the founders out there who are really doing all the hard work. So it's building goodwill in the ecosystem. It helps us develop relationships with others in the market other luminaries who come talk to our founders. And then we also meet great founding teams that we otherwise wouldn't have met. So all of that helps us. Maybe in the future we invest in some of these companies, although it's not an investing program per se.
But if you like someone, or you think that this startup is great, you could invest in it.
We could. Last year we had a company called Yellow Messenger, which was part of Extreme Entrepreneurs. Through the 8 weeks last year of Extreme Entrepreneurs, we worked with them just like this. A couple of months after that, after Extreme Entrepreneurs ended, it turned out they'd hit some interesting milestones, became more of an interesting company. And earlier this year, we led a Series A in Yellow Messenger, which itself has now grown a lot since then.
So you noticed any candidates this year?
There's some interesting companies, but we're not talking to anybody about funding at the moment.
So when you guys went through this exhaustive checklist of almost 900 applications, what made you decide these 10? Was there a common theme?
Yes, and it's based on the name Extreme Entrepreneurs. We basically, one of the questions we asked all 870 was, what's an extreme situation you went through in life, and what did you do? What was the extreme thing you did in return? I remember last year there was a company that came that we ended up selecting where in the Chennai floods early last year, this was a team that used to work at Practo, the company that connects consumers to doctors. And they actually drove to Chennai, parked outside the flooded zone, through Practo located a bunch of doctors in Chennai, hired a couple of boats, loaded doctors onto the boats, and went to the submerged houses taking care of patients. Wow. That is extreme.
Right.
That team got selected.
Yeah.
And I think they've done well since then. So we just find in hindsight that people who do extreme things, go the extra step, are the people who make it great entrepreneurs.
But Dev Khare, what this checklist that you're describing to me and the theme that you've got for the initiative Extreme Entrepreneurs, isn't this perhaps already part of your checklist for when you try to find entrepreneurs that you want to invest in with money?
Yeah, it is part of it, but it's not to this level. Like, we wouldn't just use this criteria. We would put a lot of other lenses on it. Is this a big market they're going after? How is the product doing so far? What revenue have they gotten to? What is the team like? All of that sort of stuff. But here we're using a singular criteria.
Because money is not in the equation.
Yeah. We're just saying who's done this extreme thing, and there is a second criteria, which is who can benefit the most from this. Because there's a lot of, in fact, I think the vast majority of founders in India just don't have access. So there's certain teams out there that have lots of access. They wouldn't get through this program, into the program. But there's lots of teams out there that just don't have access. They would really benefit from a program like this. So those companies get shortlisted at a higher rate than other companies.
I want to tell you that when we promoted online that we're going to get you on Startup Central, we got a lot of questions from our viewers, and one of the big theme was, what is Dev Khare's checklist? What does he look for in an entrepreneur? Because like I said, you seem to have a Midas touch, you as well as your partner BYJU'S. You've discovered some of the unicorns in this country. So do you want to share that with our viewers?
First of all, let's say BYJU'S has done fantastic, and kudos to him for being able to partner with these fantastic founding teams at Uran and OYO and all, and I'm learning from him, so it's fantastic. In terms of my checklist, I think there's three basic things that I think all venture investors look for at the early stage when companies haven't launched yet or have just launched. Three things. One is an A+ founding team, and we can talk about what that means. Second is a big market that they're going after. And the third is sort of the right model to go after that market. I look for big markets and great teams. The model changes over time. If we find the teams and the markets that are uncapped, that are huge, then we like to invest there. An example of huge would be, we had a company called Indian Energy Exchange that went public a couple of years ago. They were going after the electricity market in India, which is at that time was, I think, $150 billion a year market. That's a big market. Uran today is going after a $900 billion, nearly $1 trillion market of B2B trade. OYO is going after a global market of, I don't remember, $1 trillion or $2 trillion of hospitality spend around the world. So these are big markets versus we see sometimes companies going after a market that's $100 million or a $50 million market, something that will never be bigger than $200 million. There just isn't enough upside there to build big companies. So that's what I mean by big market. And by A+ teams, I mean teams that sometimes are complete. They have people who can go drive revenue, but also build great product, not just product or not just go to market. Teams that are work together well, that are aligned, that are aggressive, that want to disrupt markets, that are not doing something because another company is doing something in the same space.
No me too.
Yeah.
No me too model.
So we like some of these things, and our companies reflect that in hindsight. Nobody had done an Oyo type model before Oyo. Nobody had done a BYJU'S like model before BYJU. Nobody had done a social media company for India before ShareChat. Nobody has done software for Kirana stores before OK Credit. So these are new categories that are born but can be vast, because, for example, in OK Credit, there are 60 million Kirana stores or small businesses in India. None of them use technology. That's a vast opportunity. In the case of Oyo, there's all this spend around the world in sub-100-room hotels, but nobody's organized it and upgraded the supply. In BYJU'S case, education spend in India, as we all know, is huge, but nobody's managed to do it online. These are vast markets that these companies are going after. So that's some of our filtering.
I believe you're the man who discovered Ravindra and BYJU'S. So do you want to go back in time and tell us how he approached you? What made it all tick?
Well, in all humility, he didn't approach me. We approached him.
Oh, you approached him? Okay.
He was doing very well, and he continues to do very well, BYJU. Several investors had come before us and invested as well, so we weren't the first. But what we really liked about the opportunity, and what we continue to like, is that education in India and a lot of Asian countries, which are exam-centric cultures, education is a top spending item in these households, all the way up there with rent or clothing or food, literally. Whereas it is true in some other countries, especially a lot of the developed countries, education is a government spend. It doesn't come out of the household budget, and so a lot of parents in those households just assume the government schools are going to take care of it, and they do.
And they choose their neighborhoods based on that as well.
Based on that, and the schooling system there is just a different level of standard quality. So here the spend levels are very high, and what we really liked about the company, and we continue to like, is that BYJU has been an educator now for the last, I can't remember, 10 years.
He's filling up stadiums, literally.
He's filling up stadiums, self-educated, autodidact, and a lot of the people who joined him at the company were former students as well. So he's just got this charisma and this vision about the market that's helped him drive the business in India. And now he's launched in the US with this K-3 product for kids, along with Disney. So there's a lot of interesting stuff going on there, and he's always looking for the next thing. I've learned a lot from him about how to be aggressive in the market, how to build a new category in the market, how education itself can be a great business and do good out in society.
Do you have a favorite in your portfolio?
I don't think any investor will answer that in any specific way. It's like saying, who's your
favorite child?
Kid?
Yeah.
We're not going to do that. But so the answer is no.
Any sector you're more favorable towards right now? What do you like more compared to the others?
Yeah, look, in venture, in early stage startups, the sectors that are promising change over time. So in my last 15 years of sort of investing experience in the US and in India, sectors have changed. I remember in 2006, when I was doing some of my first investments, Twitter had just started. Facebook was a few years old. LinkedIn was getting started. And so everything on social media or enabled to social media was early. So social was a category for a long time.
Yeah.
That's gone in the US, for example, and there's other things now. In India, e-commerce 1.0 was the 2012 to 2015 type of early stage opportunity. That's gone. But now it's e-commerce 2.0 with social commerce that we're looking at.
Yeah, hyperlocal as well.
Hyperlocal was strong in 2014-15. That's sort of gone. There's sort of other stuff happening now. SaaS was not an opportunity 5 years ago. Today, that's an opportunity we're looking at. Technology for small businesses, or MSMEs or SMEs as they call it in India, was not an opportunity. Now it is, because they've all got smartphones and geo connections, right? So fintech was less of an opportunity, but now with UPI and eKYC and all that, that is an opportunity. So all of these areas we're looking at, logistics and SaaS and SME and fintech. Mobility is a big one, whether it's cars or rickshaws or motorbikes or cycles or buses. We're investors in shuttle. We really like that sector. So it just changes. And we are seed and series A investors. We love to talk to founders who are just starting out. So anything in these sectors is good for us. Having said this, if there's somebody who comes to us from a new sector that we haven't looked at, we'll look at it first principles and say, can it be a big category like I talked about before? Is the team A+? We love to back those things as well.
When someone goes through your portfolio, what's very interesting is that you've found companies which you said you may not have realized, but you can see it in hindsight, that they're solving problems for real India on a large scale, right? But somehow what I found missing was healthcare and agriculture. Is that a space that you think is just not evolved enough as yet, or maybe being ignored by entrepreneurs at the moment?
Two answers to that. One is we don't get everything right, so maybe we've missed something that's gotten really big in those sectors. But secondly, we've looked at a bunch of companies in those spaces. We're certainly not blind to those spaces. We've looked at a lot of agri-tech companies, all the way from farm to fork and everything in the middle. We've looked at a lot of healthcare companies from a doctor perspective, from a patient perspective, from a hospital and provider, from a health insurance perspective. We just haven't found something in those two spaces that we think can be huge impact yet and scalable. We found a lot of businesses that solve and create small efficiencies. And then we found a lot of companies with a lot of vision. Like, for example, 3 years ago, there was a lot of doctor consult companies that can connect consumers to doctors online. We had a view on that space. Our view was that you cannot get between a consumer and that doctor. If there's a relationship, you're not going to insert anything in the middle. Our view is that if there's something that serves the doctor and that helps them serve their patients better, that's the better way to go. So we're looking for that.
Okay.
So if there's folks out there who are serving doctors and physicians and helping them do their job better, we'd love to talk to them.
You told us what you like. Do you want to tell us what you don't like? Because that's also very good to know.
I mean, I mentioned a little bit of it before. Me Too's are companies that are doing things because somebody else is already doing it in the market is tough. In technology, what we find is, as investors, we want to go after companies that can be big, and we typically find the number 2 or number 3 in a space can never be as big as the number 1 from a value creation perspective. So we want to go for companies that can be leaders in their space, and typically if you're copying somebody, you're not going to be the leader. We also don't like incomplete teams generally. We like teams that have somebody who can build technology, but somebody then who can also sell the product and the vision. So we like those. In hindsight, we like companies that are solving India-specific problems. There's a lot of companies who come to us and say, look, this is happening in China, this is happening in wherever, Europe or the US, so it's got to happen here. We tend to sort of not pay attention to that comment, but just look at first principles. Is this a great business in India? Does this make sense for India? Is this solving an India problem? And then go after that.
Okay.
So those are the sort of businesses we tend to not like. I think the final thing I'll say is, there's a lot of talk these days about Indian startups raising a lot of capital and founders diluting a lot, etc. We tend to focus on capital efficient businesses, at least at the beginning. And once they've scaled to a certain point, yes, if they want to take over the world, there's more capital to be raised, and that's their decision. Like OYO's raised a lot of capital and is launched into a lot of markets, which is fantastic. But in the early days, seed through Series B, C, we like to see companies that are very capital efficient, can use the power of technology to get to massive amounts of people.
Basically burn less and do more stuff with the capital that you've already got.
Exactly.
But even if you look at OYO, is it creating in that sense a precedent or a new benchmark, whether it's to do with valuations as well as the buyback philosophy? He's the first guy perhaps from the startup universe to have done that.
So I'm not going to comment on the whatever's happened there or hasn't happened.
I'm going to try still, right?
That's for OYO and Ritesh, the founder, to comment on. But I'll say that valuations and fundraisers are, at the end of the day, a pit stop for companies to fuel themselves, and then they go and expand further. So anytime a company raises funding, we believe the investors in that round have convinced themselves there's a lot more to build beyond. And we certainly believe there is with OYO. There's a lot more to go. They've launched in China, in Southeast Asia, in Europe, in the US. And, the world is sort of open to them in a sense. And there is capital needed to do that. Yeah. But we think there is a gap in this market. Sub-100-room hotels around the world are just not catered to and served. Everybody focuses on massive, large hotels. But this category around the world is open for OYO.
And of course, he's shown his own conviction as a very young promoter, the youngest unicorn that we have in the country. But before I let you go, one more observation. While mostly fundraising seems to be part of the news, how has the whole experience of exits been in India? And you're an early stage investor, and that has to be an important part of your entire strategy, right? Because we've still not seen the IPO route being popular over here.
Yeah. So my view there would be that, look, the venture ecosystem got started in India in 2006. It's been 13 years. It's still a very young ecosystem compared to China, which is 7 to 10 years older than that, and compared to the US, which is 1969 onwards, right? So it's a young ecosystem. That's one thing. The second thing I'd say is it takes time for companies to get big. And for exits, whether it's going public or M&A, being bought by another company, you need to be a big company before exits happen. And I think in India...
Like what you saw in Flipkart's case, maybe?
Yeah, it got to be fairly big before the exit happened, right? Whereas there were people who were asking for, where's the exits, 5 years ago at Flipkart. It didn't make sense. Companies have to get to a certain scale to be really, to get the exit. And so now is the time when companies are getting really big in India. And now is the time we're going to start to see exits. In fact, we see a very active secondary market in a lot of the companies that have gotten big.
Which is basically fund-to-fund exit, right? That's what fund-to-fund exit is what you're saying.
That's happening. That's a very active market for a lot of companies. We're starting to see, companies gearing up for IPO now that they've gotten big enough, right? We've heard comments around certain companies out there that are gearing up, whether on the SaaS side or the B2C side. I think that'll be interesting to see. And so, the future looks good. I think 5 years ago, everybody was trying to look for exits too early.
Okay.
And trying to compare it too closely to China and the US. And this is not China, this is not the US, this is not some other country, this is India.
So you have to be more patient as well, is the message that you're trying to send out.
Yeah, and look for exits at the right time, not when companies have just started.
Yeah.
There was the only other example I'll give is there was a certain new political party that came to power in India a few years ago in Delhi. And within 1 day of coming into power, people were saying, where are the results you promised us?
Yeah.
1 day into power. You've got to wait a little bit, be a little bit patient. And then see what happens.
Not very often you see a venture capital drawing analogies with politics. I do like it. I have to say that. My final question, I promise you that. There's a big reset that we keep hearing about in the media, in the world, thanks to what's happened with SoftBank or with WeWork. Is it just made out to be much bigger than it is? You're still talking about SoftBank. Now you're hearing about his problems with fundraise. The second time round is portfolio companies in India. And then is it an opportunity for its competitors like Lightspeed?
Look, with SoftBank, we're co-invested with them in a bunch of companies around the world. It's an interesting approach they've taken in the market. They've certainly shaken up things in the market. We're happy to have them in the ecosystem. In terms of this so-called talk, I think a lot of it is sort of people in newsrooms
my field,
sort of saying something is going wrong, but I think a lot of it is speculation. And we'll see what reality turns out to be. We typically find on the inside at knowing how companies are doing that a lot of what's written out there or talked about is plain wrong, and so we tend to discount what's said in the media.
No offense taken.
And so just being real over here. But if there are real issues, we go and address them as well. There have been cases in India and everywhere in the world of companies burning a lot of capital without having a clear line of sight to positive unit economics. I think clearly over the last few years, a lot more attention has been focused on that. We'll see how things shake out. We're happy with our portfolio. We like how they're performing, whether it's BYJU'S or Oyo or ShareChat or Udan or Yellow Messenger or Innovator, one of our SaaS companies operating in the US.
Setu.
They're all moving very nicely towards profitability. If not, some of them are profitable.
Yeah.
We'll let them announce themselves which ones are. And I think they can all be very good big businesses out there. So we're very focused on profitability and cash flow. But in the early days, you got to invest.
With that, thanks Dev for joining us in Star Central. Appreciate you taking your time out.
Thank you.